We're going to find out where everybody stands, and I'll know within the first 2 minutes, 3 minutes, 4 minutes, or 5 minutes, like we tend to find out whether or not we're going to have a good meeting or a bad meeting. And if it's a bad meeting, it'll end very quickly. And if it's a good meeting, we're going to end up getting peace in the pretty near future, okay?
President Trump tempering expectations as he heads to Alaska for a historic meeting with Vladimir Putin, the first in 6 years. A key campaign promise is on the line as Trump attempts to broker an end to Russia's war in Ukraine. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Ahead of their meeting, Vladimir Putin praises President Trump, dangling the promise of economic cooperation and a new arms treaty. Meanwhile, China's economy slowed across the board in July, with factory activity and retail sales disappointing, suggesting Trump's trade war is starting to take a toll. And Singapore-based transport giant ComfortDelGro is now generating more revenue from its foreign operations than at home. The CEO joins us exclusively to discuss how they're navigating rising global protectionism. Our top story, Russian President Vladimir Putin launched a charm offensive seeking to strengthen his rapport with Donald Trump ahead of their summit in Alaska on Friday. Trump, meanwhile, is downplaying the likely outcomes from the talks, saying a follow-up involving Ukraine's leader will be more important as he seeks an end to the war. For more, let's bring in Bloomberg News desk editor Balazs Pans. Balazs, we know that Russia and the U.S. are coming to the table with different things on the agenda, different priorities.
Yeah, that's right. There's an interesting contrast in the way the two leaders are approaching this meeting. As we heard just recently, President Trump has been sort of downplaying what we can expect out of this meeting. He has characterized it as a feel-out meeting where he wants to mostly do listening to find out how far President Putin is willing to go, what sort of negotiation might be possible. He has flagged the potential for a peace agreement, but he suggested that that might come at a later meeting, at a follow-up meeting, which could happen relatively quickly after this one. On the other hand, what we saw from President Putin is he's trying to broaden the scope of this meeting. He's bringing in economic issues. He's bringing in sort of the wider Russia-U.S. relationship, and he has good reasons to do that. We've reported this week on Bloomberg exclusively that the Russian economy is facing really serious headwinds. The benchmark interest rate is at 18%. The budget deficit is the widest in 30 years, and the war effort is costing more and more money. So he does have very good incentives to try to lower the temperature, to try to remove some of those sanctions that have really affected the Russian economy recently.
What's the situation on the battlefield, and how will that influence how the talks go?
Well, this is a pattern we've seen as long as the war has been going on, that just before high-level diplomatic meetings, whether that was negotiations in Turkey or whether it was internal EU negotiations, Russia has tended to ramp up its battlefield activity, and we've seen there's been a summer offensive by the Russian forces. We can see on this map along the front lines, they have been making steady progress all this year, and recently there was a breakthrough. They were able to breach the Ukrainian front. So President Putin does come into this meeting being able to tout some battlefield progress, and undoubtedly he will try to characterize it as sort of an inescapable future, that he will be able to push more deeply into Ukrainian territory.
So having said that, can we talk about possible outcomes?
It seems very unlikely that we get a peace deal or even a truce agreement at this meeting, although you can't ever rule anything out with high-level meetings like this. And obviously, President Trump will want to characterize it as a success. He will want to come out with something to show for this meeting. But as we have discussed, he's been trying to downplay expectations, and he is trying to kind of gauge Putin's willingness to parley. It seems most likely that the next outcome will be to set up a next meeting that might be a little wider, where the Ukrainian president might be present. President Trump suggested that some European leaders might be present at the next meeting as well. There could be more preparations going into that, and that's the meeting where a broader deal could be possible.
Balázs, thank you so much for that. Bloomberg News desk editor Balázs Pence there. Let's get perspective with Tinatin, Japaridze, analyst at Eurasia Group, which is a political consultancy. Also with us, Angela Mancini, a partner at Control Risks, which helps organizations navigate global volatility. Angela, let's start with you. I mean, the Europeans must be nervous, right? Because we know that Putin is a great negotiator, and we have Trump, who has, so far been pretty, I guess, unsure about the position he's taking.
Yeah, it's a moment of maximum exposure for, obviously, Zelensky, but also Europe. Very uncomfortable for them not to be even a party to these talks. I think what everyone's watching, as your correspondent so nicely outlined, is what's going to come out of this meeting and both sides coming in. But it's not just what we expect in terms of outcome, but actually the personal dynamic between the two. So clearly, we all remember the meeting back in Helsinki in 2018 between Putin and then President Trump, where Trump sided with Russia as it related to allegations from the U.S. intelligence community. So we're looking for that personal dynamic from Putin's perspective. They're celebrating this in Moscow right now. They think it's a win that they're even having this meeting, this one-on-one. We're looking for Putin to reconnect personally with Russia, or with Trump, rather, and then see how he can reframe the conflict as being Ukraine's the bad actor, not Russia, and then repurpose what it is that they're actually trying to achieve. Expert negotiator.
And Tinatin, it is a win for Putin, isn't it? I mean, this is what he wanted. He wanted to deal directly with the U.S. Without Ukraine, he is getting what he wants.
First of all, great to be with you both. I do agree completely with Angela that in many ways, Putin is already getting what he wanted, and he's getting this one-on-one with Trump. This is a big win for him because he wants to remind everyone that Russia remains a key global player. No matter what happens at the summit, the optics already look really good for him going back to Russia afterwards. He is, I think, hoping to see this opportunity not just to talk about Ukraine, because at the end of the day, for him, this is really not a meeting to discuss a ceasefire, but rather to try to identify areas where he could engage with Trump in a transactional, business-like manner, and to also delay any further rounds of U.S. sanctions. I don't think that he believes he could get any sort of sanctions relief, but if he can delay any new sanctions coming in, that would already be a win for him.
Europe, where does it stand? It had, a summit with Trump. They had conversations. They told Trump what they want out of this, but can they actually shape, Trump's thinking and what happens at this Alaska summit?
I think it's very doubtful that even though the meeting happened, it was a positive that it happened in terms of the summit on Wednesday. At the end of the day, whether or not they were able to influence Trump's thinking remains to be seen. I am very skeptical. I think it was an opportunity to remind Trump that at the end of the day, this is not really just a meeting between Trump and Putin, but also a conversation about Ukraine, Ukrainian sovereignty, and Ukraine's interests as well, that in a way, Trump is indirectly having to represent at the summit. But of course, the fact that the Europeans are not present, that Zelensky, above all, is not present, is a big minus. But right now, there wasn't really anything else that the Europeans could have expected. I think the fact that they got Trump in the meeting on Wednesday, for him to actually hear them out, was already important enough. Will he take it into consideration? To a degree, but I don't think he's going in to represent European or even Ukrainian interests, really.
And Angela, we heard Trump talk tough ahead of the summit. I mean, what tone do you think he'll adopt in his negotiations, in his talks with Putin?
Yeah, I think he, as we know, his style is that he's very emotive and hears a lot from the people that he was last with. So I think it was very smart, again, for the Europeans and for Ukraine to get him on the phone and make sure they get those points across. I think, however, in the meeting with Putin, we will see Putin, again, being very masterful at getting his own points across. I wouldn't be surprised if we do see a walk back of some of the tough language that we've heard in the last 24 to 48 hours. Remember also, Putin is not in a hurry. Time is on his side. There's been battlefield advances recently on the Russian side. Of course, the economy is hurting. But he is in no rush to race to a ceasefire. Preconditions on both sides, Russia and Ukraine, have not been met such that there would be a ceasefire in a normal situation. The time pressure is really on the U.S. side. It's Trump that has said, I want to make a deal, I want to see results. So Putin actually comes in with a bit of the upper hand in terms of what he wants to try to get out of the meeting and what he has to concede. Even the fact that he's meeting, he can position as a concession and look for something on the other side. So we do expect to see some optics, some optical wins out of the meeting. They met. Maybe there'll be a trilateral meeting. Maybe they can talk about things like that they had in the past, which they never actually stood up, which was on both sides of Russia, Ukraine, a list of targets not to bomb, long-range aerial targets, things that would be helpful on the margins. But we don't see Trump coming out of that meeting holding firm in a press conference with the European and the Ukrainian points. We do see a rollback of that.
Trump has been quite clear on what he wants. He wants a ceasefire. Does it take land swaps for that to happen?
Well, that's the big question, because that's, of course, a red line for Ukraine and the Europeans, is we're not going to see those land swaps in a run-up to a negotiation. We want to start the negotiation first, right? And I think the concern is that Putin and Trump speak, and then Trump comes out and says we're going to have land swaps as kind of a condition of ceasefire talks, which would be a loss on the European side.
What's your take, Tinatin, about the land swaps? Is it perhaps possible? I mean, Rutte of NATO has suggested that perhaps, Russia can get control of the territories without Kyiv actually ceding those territories. Is that a viable option?
Well, at least as far as tomorrow goes, we are not going to see that, because at the end of the day, the Friday summit is not going to be about discussing Ukrainian territory. And I think that was the one big takeaway and one major progress that came out of the Wednesday meeting with the Europeans, to make it very clear to Trump that he is in many ways not allowed to have those conversations. Now, whether or not he listens to the Europeans remains to be seen, as I said. But in terms of any swap of territory between Ukraine and Russia, it's been made very clear by President Zelensky that he is not interested in those conversations. Now, whether or not at some point he's under pressure to give some in order to get something bigger and overall to stop the fighting, which is, of course, one of the main priorities for Ukraine, that remains to be seen. But I think they will be very, very skeptical about how much they're actually willing to give to Putin, because there's a very clear understanding around the globe, and not just in Ukraine anymore, that Putin will sooner or later want all of Ukraine. So he will not just settle for Donbass, for example.
Well, the thing is, we've seen Trump do Trump. He'll do whatever he wants to do, regardless of what everybody thinks. For Ukraine, is this like the worst-case scenario?
Well, in a way, it's something for Ukraine, and I think they are trying to be realistic about what they can expect out of the Friday summit, with a full understanding, again, that they understand that Trump is not going in there as a Ukrainian envoy to talk with Putin. But at the same time, yes, of course, they would love to have been there. This is an existential war for them. So they understand that as much as they feel the need to be at the table, because it is really, to a degree, going to be a conversation about Ukraine's fate. They know that, as you said, Trump will do Trump, and he is not just going to Alaska to talk about the ceasefire in Ukraine. Of course, he wants to talk about that, but in many ways, this is a transactional, entrepreneurial meeting between Putin and Trump, and he wants to get some sort of a deal with Putin, especially if a breakthrough, as we all anticipate, on the war in Ukraine is not anticipated. He will want to come back from Alaska to Washington with some tangibles. So if he's able to get some sort of a cooperation with Russia on other things, such as, for example, the Arctic, perhaps some sort of negotiation on the raw minerals deal, where we're hearing some rumors that Trump may be willing to give something to Putin in order to get him interested. I think this is going to be about carrots rather than sticks, until Trump feels that Putin is taking him on a merry-go-round, and at that point, I think he will try to toughen his stance. But we are still ways away from seeing that side of Trump, because he's still trying to get something out of this meeting tomorrow, if nothing else for the optics.
What are we likely to see from your perspective, Angela?
I think we'll see a joint press conference where Trump outlines some notable wins. I think we'll see a trilateral meeting stood up. I think the Europeans won't be invited to that meeting because that's probably a step too far for Putin. I think there may be some discussion around land swaps. But again, similar to some of the trade deals we've seen, there'll be some announcements that are flashy in the press conference. Not a lot of details. We don't expect anything written down. And then I think the real question for Europeans as it relates to security, and frankly over business over time, is not just what happens in the immediate term in terms of ceasefire and a winding down of the conflict at some stage, and let's hope in the next year, but what it means for the longer term. Because as we know, Finland is now in NATO. Even if the conflict quiets down, you can see Russia remilitarizing all along its now NATO border. That's causing a lot of concern for our control risk clients all across Europe and in the Baltics, people investing in real estate, renewable energies, tech, telco, really worried about not just what it looks like today, but even if we get through, if we're lucky enough to get through ceasefire and a calming down of hostilities, is Russia really in it for the long haul to actually respect any ceasefire and cessation of hostilities? A big question.
From this conversation, you get a sense that you're not going to get anything like a ceasefire, but land swaps could be the eventual agreement, right? But under international law, is that even legal? How do we look at it from, a rules-based world?
The primary blocker in the land swap situation is the fact that the Ukrainian constitution precludes Zelensky from giving that away. Now, having said that, there was a Gallup poll saying that public opinion in Ukraine is moving towards ending the war, and it's moving towards a recognition that land swaps may be part of that. But having said that, firm recognition that security guarantees would have to be part of that as well. So I do think for anything to be lasting as it relates to land swaps, hand in hand, you're going to have a conversation around very firm European and potentially U.S. security guarantees as well. So definitely expect it to be mentioned after the press conference, and raised as we go forward. But the devil is going to be in the details, as they say, because Zelensky cannot just agree that away without support from the public.
And Tinatin, when it comes to Russia, when it comes to Putin, where are its vulnerabilities? I mean, what can Trump threaten Putin with to get him to agree to an eventual ceasefire?
Well, he will be threatening him, maybe not directly going into the meeting, of course, because that would be a bad negotiation tactic. But at some point, if he feels that he has to show him some sticks beyond just the carrots, he will remind him that there are some sanctions, additional sanctions that he could impose. And that does worry Putin. I mean, of course, he can hold out, and Russia can hold out much longer. But even so, the Russian economy is not made of steel. So at some point, they need to see some sort of a sanctions easing from the U.S. side, which is one of the objectives at the summit between Trump and Putin, at least as far as the Russian side is concerned. They're not so worried at the moment about the battlefield, because they are actually performing very well. And that is very, very important to bear in mind, because I think while all eyes are currently on the Friday summit, we cannot forget that where it's all playing out is actually the battleground in Ukraine. And there, as we know, the Russians are making progress. And that will be used by Putin as a leverage point, even if and when Trump tries to remind him of his vulnerabilities insofar as sanctions go, secondary sanctions, tariffs, et cetera, et cetera. So that will not really worry Putin, I don't think, all that much tomorrow in terms of any sort of urgency, because there really is no urgency really there for him right now. The optics are helpful enough for him in terms of what happens on Friday, but beyond that, I think he will also remind Trump about his core aims that have not changed. He will insist on international recognition for the formal annexation of Crimea and the other currently occupied regions in Ukraine. He will also remind him that Ukraine needs to be prevented from ever joining NATO, and he hopes to also limit Ukraine's military capabilities in a lasting way going forward. So at the end of the day, Putin is really there to buy some time for himself, even though time is on his side in many ways. And he will be reminding everybody about the recent battlefield gains as leverage and drag out negotiations so that Russia can both strengthen its position on the ground and wear down Western resolve.
And speaking of vulnerabilities, Angela, you got to take a look at the Western alliance. It does feel like it is being unwound as we speak, right? I mean, Trump is doing that. Putin is doing that as well.
Yeah, well, we've been watching the concerns around NATO unity for quite some time. So, of course, you've got the U.S. side, U.S. now under Trump, questioning NATO commitments, questioning the use of NATO, et cetera. Then we've also been tracking trends as it relates to the rise of the far right in Europe, in places like Germany and France. Might there be a position over time where some of those other countries, along with Hungary and others that have been kind of questioning, the resilience of NATO and the commitments into NATO, that is an issue. But here, I think what's relevant is looking at a scenario down the road where, again, let's say you have a cessation of hostilities. Let's say you have Russia, which now has its economy firmly as a war economy, producing tanks, producing weaponry, remilitarizing that border, again, that NATO border that now includes Finland. What does that then mean if there are incursions over time, let's say, into the Baltics? What does Spain do? What does Portugal do? Does NATO really, again, remain unified as it might relate to some smaller incursions in countries that aren't Ukraine? What does that look like over time? That's a big question. So again, we have a lot of corporates coming to us saying, we think we understand in the realm of possibility what might happen in the near term, but it's really looking kind of 3 to 5 years out from a planning perspective, what might Europe look like, what might NATO look like, and what certainly is Russia going to be happy with actually ending the war, even if it gets some land in Ukraine that Ukraine doesn't want to give away. Is it going to stop there, or is it going to continue not just in Ukraine, but elsewhere as well? All
right, great perspective from the two of you. Thank you so much for joining us. Tinatin, Japaridze, analyst at Eurasia Group, and Angela Mancini, partner at Control Risks. And Bloomberg Television will be live at the Trump-Putin summit. Keep watching for our special coverage from Anchorage. Now, still ahead this hour, we'll discuss ComfortDelGro's revenue outlook in an exclusive interview with their group CEO after a 14% rise in first-half sales. Keep it here with us. This is Bloomberg. We're taking you live to New Delhi, where Prime Minister Narendra Modi is speaking as part of celebrations in the country for Independence Day. Modi says that he will reduce taxes on everyday items under the GST. Of course, India is also under pressure from those tariffs from the U.S. 50% is what it's looking at. Modi says India's macroeconomic indicators are strong. He says India's inflation is in control and that FX reserves are strong as well. He says starting with 1 trillion youth employment scheme. Of course, youth employment is a factor in the Indian economy. Coming up, India's latest activity data showing weakness across the board as retail consumption takes another hit. We'll get behind the numbers next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. China's economy slowed across the board in July in an ominous sign for its outlook. Production at Chinese factories and mines rose at the slowest rate since November, falling short of analyst expectations. Retail sales also disappointed, growing 3.7% for the slowest pace so far this year. The unemployment rate also climbed to 5.2%, something officials are blaming on graduation season. Let's bring in our China correspondent, Min Lo. Min, what are the key takeaways here? Pretty much disappointing across the board.
Yes, it's a very disappointing picture, as you said. Unemployment in particular ticking up, as you said, because of graduation season. We'll have to see if, over time, those 12 million new graduates entering the job market will be able to be absorbed into the job market. But retail sales is something I want to point out, because 3.7% is really a very, very weak number if you compare it to May, where we were seeing a peak of over 6%. And this could be because of the payback after the government subsidies have been rolled out for so many months, perhaps a bit of the losing of momentum there. And also we know that some places had run out of subsidies, so maybe some consumers were waiting to spend, because we know the new tranche, the third tranche of those subsidies came in around late July. So I was just speaking to an economist earlier. She was saying that maybe we could see a pickup in retail sales in August again because of those subsidies. But industrial production as well, disappointing to the downside, 5.7%. It's a slowdown from the previous month as well. There is, of course, the adverse weather, right? Because there was not only unusually high temperatures, but also heavy rains and flooding at different parts of China. So that had disrupted factory activity and construction as well. But still, it really shows you that perhaps that tariff impact is starting to hit industrial production, and also the anti-involution campaign as well, as the Chinese government start to crack down on companies and getting them to cut capacity. That perhaps also dragged on industrial production as well.
Min, we're hearing that China is mulling asking state-owned enterprises to mop up unsold homes. Will this move the needle when it comes to the property crisis?
Yeah, we actually just got the new numbers today. We also have the home sales, home prices data out, and it's showing a deepening of declines, down by 0.3% when it comes to new home prices. It's already been declining for a couple of years now. So that home sales situation looks like it's not really recovering, and that could be why we're reporting now, based on sources, that the government is mulling letting these SOEs owned by the central government to participate in helping to mop up these excess housing. Now, it's quite significant because in the past few years, the central government has pretty much left it up to the local governments or the provincial governments to clean up the housing sector. But now, allowing SOEs owned by the central government is quite an important step, and they'll be allowed to tap into that 300 billion yuan of relending facility from the PBOC, which so far has seen very, very low take-up rates. Just 6% of those loans had been approved so far, which speaks to the weakness in the underlying fundamentals of the property market, because rental yields are low, home prices continue to fall. It doesn't make a lot of business sense for state-owned enterprises to acquire land to turn them into affordable housing. So our Bloomberg intelligence analyst Christy Hang is saying that even this new measure may not be enough to move the needle, but at least it shows that the government perhaps is acknowledging that the existing measures so far are not enough.
Well, not great news for an economy going through deflationary pressures that is expected to, be sustained. I'm just wondering, in terms of stimulus, what can we expect after today's data?
Yeah, because of the big miss in the economic data, plus you add to that the weakness in the credit data, which contracted for the first time in nearly 2 decades. That's a very, very worrying sign that we could see growth from here on starting to slow. And so economists are expecting that maybe this raises the hope that China could ramp up both fiscal and monetary stimulus. Our Bloomberg economists have already forecast that initially they were thinking that, the PBOC is going to start to cut rates by 20% by 20 basis points and the RRR by 50 basis points. Initially, they were thinking at sometime around September, but now they're moving forward their forecast to sometime perhaps even within the next few weeks. But in terms of fiscal stimulus, already we have been getting all these news, every few days, whether it's free preschool, childcare, and then there is, a lot of ramping up of welfare spending, consumer loan subsidies to help people pay interest rates. So a lot of announcements had been coming through already. So some economists economists are thinking, maybe when it comes to fiscal side, we may not see much more. The government may want to let these measures start to take hold in the economy and give it a little bit of time before they decide to inject further stimulus.
Min, thank you so much for that. Bloomberg China correspondent Min Lo. Now, sources say Indonesian President Prabowo Subianto is taking inspiration from former Chinese leader Deng Xiaoping and his model of rapid, state-driven development. Prabowo is delivering his first State of the Nation address with his first annual budget also coming in later hours. For more, let's bring in a Southeast Asia global business reporter, Faris Mokhtar. Faris, tell us more. I mean, taking inspiration from Deng Xiaoping, not even Xi Jinping. What's going on?
Well, to begin with, it's simply because, Indonesia's President Prabowo Subianto, saw a lot of himself in Deng Xiaoping. Deng Xiaoping was 74 years old, when he led China's rise. Deng Xiaoping was previously exiled, and this guy was very much maligned. And Prabowo sees himself as that, because Prabowo was, he went on a self-imposed exile after the fall of dictator Suharto. He has been accused of human rights crimes. He was trying 3 times in total to become president until he finally won the presidential election last year. So those are the sort of similarities that he saw himself in Deng Xiaoping. And right now that he is president, he also sees himself in that trajectory, opening up Indonesia, delivering an 8% GDP growth that previous presidents weren't able to. That growth was only last seen during dictator Suharto's era, and that's what he's setting out himself to do, to become the Deng Xiaoping of Indonesia.
You talk about how he's aiming big, looking at 8%, but right now we're looking at GDP of, I think, in excess of 4.5%. So in terms of policies, I mean, are there similarities between what, Prabowo is doing and what Deng Xiaoping is doing? We know that policies adopted by, Prabowo are pretty bold, untested, but he's going gangbusters with it.
No, that's a good question, because that's where the similarities stop, basically. Because on one hand, you have Deng, who basically opened up China to the world, forging relations with the U.S. and so on, opening up, to businesses, foreign investors. It's not saying that Prabowo is not opening up Indonesia's, economy to businesses or foreign investors. He's very much pro-business, but at the same time, he's also, tightening the reins in terms of, governing the state apparatus. So one example would be consolidating all the state-owned enterprises under this new sovereign wealth fund called Danantara, which was previously under the state-owned enterprises ministry. Now, that fund, for example, reports directly to the president, and there are other aspects of it where he seems to have a tighter rein on things, because his main focus is basically on 3 key policies, which is the welfare of the people, food security, and energy security. And what he's seeing in terms of his policy making is somewhat of a course correction from previous presidents who have focused so much on the hard aspects, if you want to call it, more focus on infrastructure that have also caused some of the state-owned enterprises to be in debt, hundreds of millions of dollars. Whereas, from Prabowo, right from the start, it's interesting to note that, he's leaning more socialist, like his father. He has been described by his younger brother that, he's more like their father, more socialist, whereas the younger brother, who's a businessman and tycoon, is more capitalist. And, when you look at the policies that he has enacted so far, right now, it has pretty much been rolled out. But from the start, since he was sworn in October, the markets have been on tenterhooks. And right now, the markets and foreign investors continue to be on tenterhooks, wondering what is Prabowo going to do next.
It is interesting. He is undoing the policies of Joko Widodo, who actually supported him and helped him get this current position.
It is, but all leaders or presidents or prime ministers who have won an election, you want to make a mark. For Jokowi, for instance, his legacy was about building this new capital, which has yet to take flight because there's a new president in charge now, there's a new commander-in-chief in charge now. And for Prabowo, his mark is really uplifting the welfare of Indonesia, focusing more on issues like healthcare, issues on housing, which is why he's rolling out this low-cost housing program, solving poverty, which is the rate is still quite high, through his ambitious females program, because ultimately and innately what he believes in terms of governance is on human development. And from human development, then the country can be successful, and then you can focus on the next step, which could be infrastructure.
And he wants to be seen at least as the hero of the people. Faris, thank you so much for that. Bloomberg Southeast Asia global business reporter Faris Mokhtar there. Still to come on the show, Hong Kong railway operator MTR says it's looking beyond the city for growth as the local economy struggles to recover. We hear from CEO Jacob Kam. And Singapore-based transport giant ComfortDelGro now generating more revenue from its foreign operations than at home. CEO joins us exclusively to discuss how they're navigating rising global protectionism. Keep it here with us. This is Bloomberg. Welcome back to Insight. Hong Kong-listed railway operator MTR has reported a 28% jump in first-half net profit, even as revenue fell about 7%. But it's warning that the city's retail sector has yet to fully recover from the pandemic. CEO Jacob Kam told us they're now looking at opportunities in the Middle East and Southeast Asia.
We continue to look for opportunities outside of Hong Kong, both in mainland China as well as elsewhere. But of course, we will only enter into opportunities that will that our strength will actually create an advantage, competitive advantage, as well as, of course, bringing a reasonable return to our shareholders. Now, in the mainland China, in addition to the railway business, we are also very strong in terms of the station commercial experience. We have extensive experience in Hong Kong, and we are helping the mainland metros to basically to create and grow their station commercial business.
Now, MTR is perceived by some as a Chinese company. Now, whether you agree with that or not, and whether or not that's an accurate description, of course, of it, the reason I bring that up is, do you think politics has become a challenge for you to bag overseas business? I'm wondering whether or not it is actually something to consider and how you're planning to get around that.
Well, we have a growing business in Australia, for example, and we're also exploring new opportunities in the Middle East and the ASEAN countries, mainly countries along the Belt and Road. So it is, I believe we are making headway into those places.
And that was MTR CEO Jacob Kam speaking to Bloomberg's very own David Inglis. Now, staying with the business of transport, but moving here to Singapore, where ComfortDelGro this week reported a 14% jump in first-half revenue. The company operates in 13 territories worldwide and says it has no direct exposure to the Trump tariffs. Joining us exclusively, MD and Group CEO Cheng, Siak, Kian. Mr. Cheng, good to have you with us.
Good morning, Haslinda.
We just heard from MTR. They want to expand overseas. You want to expand overseas, and you are competitors. How are you looking at the landscape as you look to expand?
Well, for ComfortDelGro, we have been very active in this space for public transport, but we are operating in both buses and rail. So on the bus space, we continue to expand in the countries that we're already in. For example, in the UK, we won a contract in Manchester, which has started operationalizing this year, and that basically gives us about 30% uplift in the number of buses we operate in the UK. And likewise, in Australia and Victoria, we won a big contract middle of this year, for which we have also started running it, and that increased our metropolitan presence in Victoria by about 30%. But this is on the bus space. On the rail space, we will continue to look at lines that is going to be profitable, whether it's greenfield or whether it's brownfield, and we have some success in Stockholm, for example. We will be running the E40 by the end of the year in November, and we also won the Singapore Jurong Regional Line middle of this year. So something that we are still working on, something that the group as a strategy wanted to continue to expand our public transport space.
Let's break down the markets that you're in. UK has done really well. Any plans for acquisitions as you look to expand?
I think in the UK, we have actually made several significant acquisitions last year, but largely in the point-to-point space. So in UK, for example, we actually acquired two significant businesses. One is CMAC, that deals with disruption-related adjacent type services for point-to-point B2B a business-to-business type business. And more importantly, towards the last year, we actually acquired Edison Lee, which is a very well-known 50-year-old company that deals with high-end business-to-business premier type services.
But what does that mean in terms of contribution to your revenue, the kind of growth you can expect from the UK?
I think in the UK, we will still continue to see strong growth in terms of revenue. As you've seen in our first half results, you see a 16% growth in revenue. And if you look at the contribution from our overseas profit, it has grown by more than 60%. So that's a trajectory that we hope to see, and we continue to see that growing in the years forward.
You talked about rail. You're quite late in the game when it comes to rail versus the likes of MTR or even JR in Japan. How are you looking at it? Are you looking at rail being a key contributor to your revenue eventually?
I think rail will be something that we are looking at, and that's going to be important for us in the coming years. And we have actually leveraged on the experience of our subsidiary SBS Transit that operate 2 significant rail lines in Singapore, as well as the 2 light rail system in Singapore. But it is the experience that we've gotten from the Singapore rail that actually allow us to have the credential to start to compete by joining good joint venture partners overseas. And that started with Auckland, where we actually want to get a UGL, and that process will continue. And we're still bidding for good contracts that's coming out, and that's in the pipeline. And that's something that we do want to look forward to growing that business.
Yeah, so can you quantify that for us in perhaps 3 to 5 years? How much might rail contribute to your revenue?
Well, it's a very competitive market. If you look at what we're looking at right now in the pipeline, we have Sydney Metro West that is still in the process of being, they're still deciding who the winner will be. But what's already in, for example, will be if you have a look at Auckland, if you look at Stockholm, you look at Paris that's coming up. Our rail business in terms of rail line length itself has about 4.5 times more than what we were in 2021, where we're just operating in Singapore. So going forward, if you look at the pipeline, we are looking at easily another, I don't know, in terms of revenue, very close to $1.2 to $1.4 billion of revenue, but these are the sort of like very long-term contracts, so 10 years contracts. So that's the reason why it's so large in terms of revenue. But that's something that we hope to achieve by bidding on new lines that's coming up. And
you are bidding for that line in Australia, in Melbourne in particular, I think, right?
E40, that's right.
Yeah, so line. Yes. How confident are you? Where are you with that? What are the plans for that?
That's a very competitive line that we will put out our best. We'll put our best foot forward. That we'll try our best to do that together with a good partners that we have.
And if you do succeed in getting the rail contract in Australia, are you looking to replicate that kind of model, elsewhere in the world, in the other markets as well? Because it's not just about rail, it's also about buses and taxis. It is a model that you're adopting here in Singapore.
Yeah. I think for rail, we're a bit more specific. So, for example, in Australia, we're actually partnering with partners to actually bid for the line in Sydney currently, which is actually ongoing. And then we are also looking at partnering with RATP, the bid on the line in Copenhagen. So it is something that is quite specific. But to build a multimodal model in those countries that we already won, for example, a rail line, that's possible. That's something that we will consider, whether we could actually extend to the bus. But every market is actually different, so we recognize that. So it may not always be the same model as in Singapore.
And one market that's been pretty problematic is actually China. I mean, business has been pretty lackluster.
That's right.
We saw the data today, like pretty much a disappointment across the board. Yeah. How are you looking at the prospects for the business in China?
I think our China business is affected by the sentiments as well. We do recognize that it is a tougher market for us. But I think in the sense that in the taxi market, it's a little bit of a segment that actually allows still provide employment to drivers. So there is still a good inflow of drivers coming in. But what we lack is actually customers actually riding. So the revenues, the takings are a bit slower. So that's something that we're watching very closely. But in China, we are essentially a rental company. So we rent out cars to taxi drivers who come to us. So in that sense, it's still fairly stable, but something that we do watch very closely.
But it is sentiment-driven, and given that the economy is pretty sluggish, tariff may hurt at some point in time if it hasn't already. Are you concerned about the risks coming to your operations in China?
I think for us, we look at China as a long-term investment. But China is not just a financial investment for us. It is also something that that we look at from a technology, learning, growing perspective. So, for example, we're actually using our business in China to actually get partnership with Pony, for example, to actually test out autonomous vehicle. So that's something that's key for us. It's not just the business in terms of what we are currently. We're also using it to actually give us the capability to actually build new capabilities for us to springboard into other technology around the world.
So, what will transpire from that tie-up with Pony AI? Presumably, you'll be looking at robotaxis at some point in time, bringing them here to Singapore?
Yeah. So that's a very exciting new development for the group. So with Pony AI, what we have done is that we have 5 vehicles actually started the sandbox in Guangzhou in March this year. But it's not the 5 vehicles per se. It's actually ability to tap into the data that they're operating around China, which they have close to 500. That actually gives us the information that we need to learn to grow and hopefully take some of this learning into the other places that we could in Singapore or in London, for example. So for Singapore, for example, what was exciting for us is that because Singapore government has been talking and studying the possibility of it having autonomous shuttle, autonomous vehicle in Singapore, but because we have actually done that study early on, that actually allows us to actually come in very quickly to provide some information for us to actually start to have the ability to provide some level of trials or sandbox that we can possibly explore in Singapore.
So realistically, when might we see robotaxis, autonomous vehicles?
I think you already have autonomous shuttles that's actually operating in Singapore. I mean, there are several brands. We are actually helping Movita run autonomous shuttles already in Singapore. But autonomous shuttles in a more maybe like a Pongo or Tengah as a minister, as I spoke about earlier on, that's possible. But we don't have a specific timeline yet. But that's something that we will inform whenever we are ready to do so.
In the next 5 to 10 years, a possibility. That's quite a long period of time,
I think
Mr.
it'll
Cheng.
be earlier than 5 to 10 years. I'm quite sure it'll be earlier than 5 to 10 years.
Good to know.
That's right.
You talked about how ComfortDelGro is not impacted by the U.S. tariff.
Not immediately.
Not immediately. I mean, when do you see it biting then?
I think we're watching this very closely. So because our businesses are largely local, so the immediate impact is actually not there yet because they're local businesses. But we are careful with things like the local sentiments, for one. 2 is that foreign exchange, interest rate changes as a result of the tariff affecting the broader economy, something that we are watching very closely. But
and also your external exposure, since your business is now reliant on a lot of the foreign countries.
Precisely.
How are you looking at the risks?
Well, I think it's something that because we're operating in 13 countries, as you have mentioned, so that itself gives us a bit of a natural hedge as far as exposure to currency is concerned. But if the currency should go down, and Singapore is a very strong currency, so in some sense it's good for us in Singapore, but when you try to account for them consolidate in Singapore, that's always going to be a little bit of a disadvantage.
All right, taking comfort at home. Thank you so much for that, Mr. Cheng. Siak Kian, MD and Group CEO at ComfortDelGro. And stay tuned for our special coverage of the Trump-Putin summit in Alaska. Bloomberg Television will be live from Anchorage as the leaders discuss an end to the war in Ukraine. And before we go, here's a look at some of our guests next week. Australian mining firm BHP's full-year earnings are due, and the CEO, Mike Henry, will be joining us to unpack the results. We'll talk investment strategy with Rockefeller International Chairman Ruchir Sharma. Plus, we'll take the temperature of the markets with Moneta's chief global strategist. That is it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.